please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Miss, let's get a quick handle on what's happening in the commodity space this morning. Manisha Gupta joins in. Manisha, great day for equities. Can you say the same about commodities?
Well, not at the same level, but we have seen some greens come back here as well, especially for the crude oil prices. We are trading 0.5% on the higher side, and this is ahead of the US weekly inventory data. You could be looking at a 9th straight week of drawing the US inventories, and that in turn, of course, has been supportive for the prices. 4100 is back on your screens for the Indian crude oil prices also. If you look at the gold and silver prices, well, we have seen some profit taking come in today. The US dollar, that is off its lows, and that seems to have pulled the gold and silver prices down. In any case, you really need some more to see prices move much ahead from here. We did see resistance coming in at $1340 per ounce on the higher side for the gold prices. Remember, 2017's high for gold was at $1357, so that is going to be a resistance for gold prices for the near term in the near term for this year as well. It is the industrial metal space which actually has come back in case of buying. The markets have seen these forex regulator statements coming in a few minutes back saying that they are expecting balanced inputs for all of 2018 as well. But what we really are waiting for is the China GDP number for the 4th quarter and also the China retail sales, industrial production. All of those numbers are due in next few minutes, and that is what these markets would take cues from. In any case, yesterday was a day of profit taking, and you have seen some opportunity buying come back as well. So whether it is Shanghai or LME, both these international exchanges are doing well for metals, and that's exactly what you have seen come in for the Indian prices as well. Trading strategies from brokerage, and we have KDR Commodities talking about precious metals today, and it is an intraday sell call for both of these commodities. For gold prices, the Feb futures, you could be looking at a target on the lower side at 29,600. There is a sell call on silver prices from them as well, and they are expecting to breach below 39,000. 38,950 is what they are watching out for.
Okay, thank you very much for that, Manisha. With that, we shift focus back to equity markets, and one of the stocks that's doing extremely well at this point in time has been HUL because of the numbers showing fairly decent rural demand. Now, is this something which other FMCG and consumer companies are also experiencing? We heard the Jyoti Labs tell us something similar. So in that vein, today we have with us TTK Prestige. That stock was also up and about in trade. Yesterday it was a gain of 7%. Today there's a little bit of give back. But how's business progressing this quarter? We are joined by Mr. T.T. Jagannathan, Chairman, TTK Prestige. Good morning, Mr. Jagannathan. It's always a pleasure having you with us, sir. Well, that's the first question. How is demand shaping up? Is it looking better than, say, the previous 2-3 years?
Yes, certainly. It is looking better. And there is a large rural push, too, that is accounting for that.
Okay. Would you say that rural demand is the surprise for you? It's doing much better than previous years. And is it even better than urban demand?
It's not a surprise. Now, we were expecting this. A lot of government policies, the Ujjwal scheme, the MNREG and so on, there is a lot of rural money now, and we were expecting this, so we prepared for this. I won't say it's doing better than urban markets, but I would certainly say it's a pleasant surprise that rural markets are doing well.
Okay. Mr. Jagannathan, morning. That's great to hear because many of your peers like Jyoti Laboratories, HUL have also spoken about an increased demand, especially in the rural markets. I wanted to ask you for your key segments, cookers, appliances, cookware, where are you seeing the maximum amount of demand coming from?
Across all segments. Largely in the high ticket items, new innovations, which has helped us increase our margin percentage.
Okay, so when you talk about high-ticket items and innovations, you launched a range of kitchen appliances. You also have forayed into the home segment. So your new segments, have they done as well as you would have expected? And what's the growth rate looking like over there?
In fact, it has done better than we expected. You can't compare growth rates. So when you grow from 1 to 2, it's 100% growth. But when you grow from 1 million to 1,000,001, there's no growth. These are new segments, so we have to wait and see.
Okay. So I just want to come back to that demand.
It is 100% growth. But from 3 crores, if we go to 6 crores.
Okay. No, sorry. Yeah, take your point, sir.
Go ahead.
No, I wanted to just go to that rural demand point where you use the words pleasant surprise. You know, you had a great run from in the 2000s up until
Yes.
2013. You know, year after year, you churned out growth over 25%. Is it looking anything like that?
I believe it will get there. Yes, this year, in fact, is looking good. If you adjust for GST, I think we'll grow in the high double digits. And it looks good. Yes, it's looking good.
Okay, that's very positive, sir, to say that it is at least harking back to the 2000s.
Oh, absolutely. You also had a range of new launches. Recently, you launched the
Yes.
Tattva range of water purifiers. You have the, the domestic electric mop that you guys launched. Just trying to understand a little bit about this market, the water purifier segments and some of the other segments that you've gotten into. What kind of scope do you see, and what kind of investments would you be making for further new launches?
The water purifier segment is very underpenetrated. India requires purification of water at every level, urban, rural, village, and so on. And so we've started with a non-electric water purifier, which is the largest market in terms of size, not in terms of money. But from there, we will be adding products in the water purifier segment. Also, you must remember, it's a very, very competitive segment. So we are hoping to do well. Let's see what happens.
And the investments that you would be making in this segment?
Well, I can't predict that upfront. We are making significant investments in cleaning solutions and water purification.
Okay, but generally, what is your capex plan? Are you producing much above your capacity now that you will have to contemplate capex?
That is correct. We have almost reached our capacity now, and we are contemplating capex now.
Okay, how much might that be? Any ballpark numbers at all in terms of what you might invest?
It'll be over a period of 3 years. We are working on the numbers. We should be ready with the numbers by April, and it will be over a period of 3 years.
Okay, and two final questions on margins, Mr. Jagannathan. Where is the demand coming? Is it in the higher value-added products, in the more expensive products, or are you seeing an equal demand in, say, the more mass products?
You see, both are happening. In the urban areas, it is high-ticket products, and in the rural areas, it is the mass market products. So both are happening.
Okay, and what about margins? Since some raw materials have gone up, will they improve? Will they stay where they are? I think you did about 12.5 in the first half.
Yes. We believe it will improve, yes.
Oh, okay. So improvement on that as well. Mr. Jagannathan, it's a pleasure speaking
I
with you.
can't talk to you about the third quarter because the board has not approved the...
Fair point.
Thank you.
Fair point, sir.
To invite our next guest, just want to point out the issue here with HDFC Bank, and that's why that's one stock which is sustaining its morning gains. The HDFC Bank ADR trades at a 15 to 20% premium, and yesterday, while all the bank ADRs, GDRs did well, HDFC Bank ADR didn't do much. And the reason the premium is on account of the stock being perennially in the FII restriction list. We saw that one day when the limit was open, it didn't even last for 2 hours. So the FII window is always the first to be exhausted for HDFC Bank. Why is the issue here? Because the regulators classify HDFC's 26% stake in HDFC Bank as foreign ownership, because HDFC itself is 75% owned by FIIs. In the past, HDFC Bank has made presentations to the RBI that that should not be classified as foreign holdings, but on that RBI has very clearly been saying that no, that will be classified as FII holding. So of course, we're assuming that this issue which we're dealing becomes a law. If that happens, then this whole issue will become meaningless, and that's the reason that the market is latching onto HDFC Bank, and the stock is still
that
up
extra
about
24% opens up for HDFC.
Exactly.
For HDFC Bank.
HDFC Bank.
Yeah, and of course HDFC gains because the subsidiary stock gets pricier. Quite clearly, that stock should be on your radar. The best beneficiary, the single best beneficiary if this rule were to come through, if this proposal were to be taken. But let's shift focus to Tata Sponge. Put up a very strong show in the third quarter. Profit after tax soared 200% between this, the profit trebled, while margins too expanded. Sanjay Patnaik, Managing Director, Tata Sponge, joins us on the phone line. Mr. Patnaik, good morning. Thanks a lot for joining us. First up, some details. Can you give us the breakup between how much was the volume growth and how much was the realization growth in your 50% revenue?
Good morning to you. Yes, it has been an excellent quarter. We had recorded 22% volume growth and sales growth of 25%. And supported by this, the NR also has increased in the marketplace. So therefore, we have posted this good number.
Okay. So are you on track to meet your sales volume guidance of 410,000 for FY18?
Very much on track. I'm very confident that we will achieve that.
So can you give that number again? How much was volume and how much was realization?
In terms of volume, we recorded about from the realization part, I think there was about 500 rupees per ton increase, and rest was volume. I think the volume was more because from the last quarter we recorded something like from 89,000. This last quarter it was 109,000. So I think maximum came from the volume growth.
Okay. Mr. Patnaik, good morning. Good going, of course, for your company, and your cash levels are going up as a result of that. If you could give us the level right now and any use of that cash.
We are in discussion for putting up a long products plant, and we have got our board's approval for applying for the environment clearance, and it is work in progress. We are discussing and finalizing the process route, the asset configuration, the size of the plant, and the product mix. So it's work in progress, and I would think that once it is finalized and all, then we should be trying to put up a steel plant.
Okay.
By when? By when would that happen?
As I said, it is still work in progress. It is being discussed, and one of the advantages is that we have land. We have some of the infrastructure readily available at our existing site. So therefore, we are a debt-free company. We had cash, surplus cash and all that. And therefore, I think we are in a position to execute that. But the options are many, and it's still being discussed. And once it is finalized, maybe you will all come to know about it.
Okay, I just wanted to know about margins. It's a fairly decent growth that you have seen in margins in your third quarter. But then now the coal price spike has come. What may margins be in the... what is the impact of coal basically? How much has the price gone up for you?
Coal price has gone up. Coal price has really gone up. It's about increased by 10%, 10-12%, and more than the international price going up, we are also facing a lot of logistics challenges because of shortage of wagons, and therefore we are trying to get coal from not our nearest port, Paradip. We are now trying to source it from Gangavaram, from Vizag. So this also has added to our input cost. But I would imagine that since there is a demand pull now for sponge iron, and the demand is picking up, so we would be able to absorb this increased cost. Of course, we need to be careful and try to control that and increase cost, and I think the NR is going to be fairly strong in Q4.
Okay, I just want to come back to that, the question on utilization of your cash. What is the current cash balance on the books now?
Current cash balance and the books is about 800 crores, close to 800 crores.
Okay. All right, we'll leave it at that, sir. Thank you very much for joining us with all those details. We leave the markets in a fairly strong position with a near 2% gain in the Bank Nifty after the dips. So the dips getting bought.